distinguished panel. We've got Don Luskin of Trend Macro, Joe Battipaglia, Stifel Nicholas, Kudlow & Company contributor Jerry Bowyer of Benchmark Financial, and Michael Pinto of Delta Global Advisors. And waiting in the wings to talk Fan and Fred, we have Steve Moore, Wall Street Journal editorial board, and Chris Whalen of Institutional Risk Analytics. Hello, everybody. Let me just go to my market gurus for a quick whip around. Don Luskin, you got to explain this kind of a day to me. Just give me a quick hit. I mean, in a sense, I'm real interested with all the topsy-turvy that went on with Fannie and Fred and rumors and this and that and the other thing. What is your market outlook right now? The market was down another week. We are in an official bear market. Where are you going on this, Don?
Where you've got to go on this is you got to say, I'm guided by the future, not the past. Fine, the bears had it right. If you start your measurement from October 9th, 2007, we're down 20%. That's great. That doesn't say anything about what's going to happen over the next 8 or 9 months. When you've had this kind of wipeout in stocks where most of the damage has been concentrated in a single sector, and you keep saying that these stocks have, $8 to zero, $5 to zero. The great thing is when they hit zero, they're going to stop hurting us. So we are really close to the end of this thing. At some point, the bears have got to stop doubling down. They've got to say, I was right, but was is the past tense verb. We got to start looking into the future. These stocks are getting really cheap. You've just got to buy them here.
Joe Battipaglia, what's your view? You heard Don Luskin, and I just want to add, we have 7% of the companies reporting, 34 out of 500. Now, overall, of course, they're getting killed because of the financials. But if you take financials out, they're actually up 5 or 6% in the early reportings point. What's your take, Joe Battipaglia? Is Don Luskin right? Are the bears played out?
No, that's only part of the story, because in this quarter, 9 out of the 10 sectors all had cuts in the earnings expectations going into the numbers we're getting. We will soon see the same thing play out in the third and fourth quarter. Why? Because our economy is dead in the water. I think it's recessionary. That's an arguable point. But as long as you have falling employment and you do not create jobs, as long as you have rising energy costs and, of course, the tumult we're having in the credit marketplace, the economy can't move. So what happens as you enter bear market territory, unfortunately, you will go deeper into bear market territory. And while the financials are on their backs, the rest of the market is still hanging in there, and therefore you can have further correction in stock prices, and perhaps it's the industrials and the commodity stocks that have provided the only leadership in the last quarter or so that will now give ground in the bear market.
Mike Pinto, it's so interesting to me. What do we get this week? Mr. Bernanke is going to have a power grab. He's going to be the financial stabilizer in the sky. He's going to regulate Wall Street investment banks. He's probably going to wind up bailing out Fannie and Freddie if it comes down to that. And then we get this report. I didn't hear any discussions today on this network, and I'm sorry about that. Import prices from the weak dollar up 20%. And even if you take out the fuels, all fuels, 7%. You're still up over 7%. The dollar's sinking. Gold had a great week. Yeah. What does this tell you about the state of American finance?
Well, I'm very, very concerned about it. This country is moving inexorably towards socialism. We had an opportunity to let the free market bail out the housing market. How about let home prices drop back into historical norms? Price-to-income ratio of about 3 to 1. They're still about 20% too high. The financials are not going to heal until home prices correct, and the stock market is not going to heal until home prices return to historical norms.
But you know that's not going to happen. That's not,
why won't they let it happen?
There's an FHA bailout bill coming down the road.
I know. Isn't that wonderful?
The Federal Reserve, the Treasury Department, Christopher Dodd, Senator Dodd, they're all standing behind Fannie and Freddie. They're all willing to open up. We don't know. Bernanke rumors are going to put that up on the board in just a second.
Fannie Mae.
Does anybody, can you lose in capitalism anymore? No, it was Hayek.
Where are the Republicans?
I don't know. I don't know what's become of them. Friedrich Hayek, the great economic philosopher, said the great thing about capitalism is you can succeed beyond your wildest dreams, but you can also fail. Is failure an option in this system anymore?
And Ben Bernanke has the hubris to believe that he can repeal the business cycle. So watch out. Anybody who's long the dollar or short gold, you're going to get burned.
Let me put up, we got a Fed statement late in the day, which essentially denies what seem to help the stock market briefly. Here's what Bernanke said about, this is what the Fed spokesperson, okay? It's not a direct Bernanke quote. Quote, Fed officials are following the situation closely. However, there have been no discussions with the GSEs, that's the government-sponsored enterprises, about access to the discount window. I'm not prepared to discuss the range of options or alternatives being considered. Now, Jerry Bowyer, the reason I'm running this little bureaucratic whatever it is that I just read is that the AP wrote a story that said Bernanke talked to Dick Siren of Freddie Mac, the CEO of Freddie Mac, and Siren's people put it out to the AP that the Fed was going to open the discount window to Freddie and presumably Fannie. The Fed is essentially denying that with this statement. I don't know if this matters at all, but I just want to get your point of view because I think this has become a nut house, nutcase story.
Yeah, it has. I think that the Fed statement was a little parsed, wasn't it? It was, well, no, we didn't agree to do this, which is not exactly a complete perfect denial that they had discussed it. I don't believe that the Federal Reserve will let Fannie Mae fail. I believe that if we get a crisis situation, not just a down market, not just the shareholders getting hit, but like a liquidity crisis, if we get something like that, even if it happens over the weekend, I believe that our central bank will open the discount window and lend freely in times of panic. So I think we should ought to settle that, and the denial is not really a denial. By the way, I'm fine with that. Lender of last resort, that's what a central bank is for.
But Jerry, there's no free lunch. That is going to engender further inflation. Did you see the inflation numbers today?
I did.
Yeah,
I did. And
when
inflation,
the government makes a bailout,
Mike, stop. You guys are you're just simply wrong about this. The primary dealer credit facility, the day it was announced to help the Lehmans of the world, it was also announced that they would be sterilizing every penny of loans there, and that is what's happening. If you create a GSE credit facility, that will be sterilized too. So that isn't what's going to cause inflation. What's going to cause inflation is if the Fed leaves the funds rate at 2% forever.
All right, well, you're actually
with this panic in the air, they're afraid that that's going to create so much panic in the overall economy that they won't dare to raise rates. That is where the rubber meets the road.
Yeah, and they're going to sterilize everything when they buy all of Fannie Mae's paper, too. Yeah, I believe that.
Let me ask this question. I guess it's a silly question on a day when we're all obsessing about Fannie Mae and Freddie Mac and whether they're going to go under, and they're not going to go under because the American government will never let them go under, right or wrong. That's point number one. Point number two, Don Luskin. Where was the Federal Reserve statement today that said, we are deeply concerned about a 20% increase in import prices, 7% above, let me see if I got that right, 7.5% above year ago, taking out all fuel. We are concerned. There it is on the chart. Total import prices, 12 months to June, Don Luskin, 20.5%. Check it out. Now, I think we have excluding fuel. We put that back up
and
there.
last month it was 18, so it's getting worse.
And look, it was 0 in early 2006. Now, Don Luskin, here it is. Non-fuels. All right, take out everything. 6.6%. I beg your pardon. In early 2006, it was close to 0. I was looking on all the websites today for the Federal Reserve press release that said we are deeply concerned about this, and we are deeply concerned about the continued chronic weakness of the dollar, and we are deeply concerned over the fact that gold is now marching towards 1,000. Where was that, Don? I missed that. I know my eyes are old.
Hey,
my concentration's not as good as it used to, but I completely missed that. Look at this. Check this chart out. The gold value of the dollar. This is from our friend Mike Churchill. It's the inverse, okay? It's the dollar in gold terms. I just love that chart. It falls off a cliff in recent years. Where's the Fed press release that says we're worried about this?
It's simple. You're just looking for love in all the wrong places. The Fed is never going to say. The Fed is never going to say that because the Fed, right or wrong, it's got this dual mandate, and right or wrong, it feels very confident that if it comes to it, it can control inflation when it has to. It kind of knows how to do that. But the other part of the mandate, which is to save the economy from a slowdown, it's not really very good at that. So it's putting all its mental effort and all its verbal effort into the thing that it thinks is difficult, the thing that it has less confidence in. Now, in a way, look, you and I are agreed that the more important thing is to control inflation, because the best way to help growth in the long term is to have a strong